Hello. The following is an analysis of the housing price index to determine when we should have bought and sold so that we could have made a lot of money. Hello. First, let's discuss our data. Our data is obtained from Atlanta, Portland, and Washington, D.C. It is from the S&P Case-Shiller Index, which uses the year 2000 to normalize for a 100 in the price index. That means that if you have 125 in the price index, then in general, prices in that area you're looking are 25% greater than what is considered normal. For the purposes of our analysis, we will be using data from January 1st, 2000 to January 1st, 2016. That way we have a sample size for each month from the last 16 years. When looking at the graphs side by side, you can easily see the differences in each market. Atlanta had a fairly consistent market, though it did dip slightly below 100 during the crash. DC had a fairly high market with consistent levels of over 200, but it hasn't completely recovered to its pre-crash levels. Portland, on the other hand, has a very good market right now, and it's seen a great recovery since the recession in 2008. Upon looking at the data more closely, we see that Washington, D.C. experienced its highest point around March of 2006 with an index that reached almost 253. Conversely, Atlanta saw its peak around 2007 with an index of only 136. It reached its bottom with an index of 82, while Washington, D.C.'s bottom only reached 169. Portland, on the other hand, was different from these two because it had a pre-crash peak of 185 in 2007. However, now it's reached an all-time high in January of this year of 194. Portland reached its bottom in 2009 around September with a bottom of 147. So you may be asking yourself, what does any of this matter? Why should I care? Well, the answer to that's simple. We can look at the data and see that we could have made a lot of money. Emphasis on could have, because most of us probably didn't buy a house because we didn't have the money or weren't old enough or whatever the reason. So this is really only good in hindsight. So what does that mean? That means if we could send a message to our past selves with presumably a couple $100,000 so we could invest in the housing market, then we could have bought a house in Portland around about into summer 2009, and then probably made at least like a 50% profit on average, which would have been great. Unfortunately, it's in hindsight, so it really doesn't matter now. But it's still interesting to note. So here are some fun, or maybe not so fun facts, depending on how you look at it. As you can see from both this histogram and pie chart, DC consistently had an index that was over 200. As a matter of fact, over 50% of the time, it was over 200, and matter of fact, it still is based on the data that we saw earlier. So, in general, DC is a really expensive place. Here are some more fun facts for all the stat nerds out there, which is all of us at this point, right? I mean, we all love stats, right? Okay, anyway, as we can see from this data table, the means in Atlanta and Portland were very different. With a mean of only 114 in Atlanta, it explains why the price didn't vary all that great, along with the standard deviation. Whereas in Portland, they had a much higher standard deviation and a much higher mean, which means that prices on average were higher and that they varied a lot more. So, what conclusions can we draw from all this? Well, we know that In Atlanta, the housing market was pretty bad considering it was much higher in DC and Portland. The index barely stayed over 100 for most of the time in Atlanta. Really was only like in the 110s, 1 teens, which is not all that great if you're trying to buy a house and sell for a big profit. Though if you just want stability, I guess Atlanta's alright. DC, on the other hand, was really expensive. Prices were consistently over an index of 200, so that's a lot. You could have made money in DC in the past, though now it's just expensive homes that just keep getting a little bit more expensive, then a little bit less expensive, but still pretty expensive. Portland, on the other hand, is experiencing record price index highs, which means if you bought a while ago, you could be making a lot of money now. But if you want to buy, Portland's probably not the best place to buy. Though it could be a good place to buy if the index continues on its current trend of upward mobility. So I guess if you buy now in a couple of years, if the index reaches some of the highs like it did in DC, you could come out okay. Though it would be a big risk. So what conclusion? And that's really about it. These are the works that we cited to get our information, and we hope you all have a great day and continue enjoying stats.